Welcome back. You're still tuned into Closing Trades right here on ETNOW. And on the show, we now have Mr. Sunil Subramaniam, market expert, now joining us. Kunal Botra is still with us. Mr. Subramaniam, let me come back to you and let me talk about the IT sector first. Given the kind of correction that we're seeing in the index, yes, we did see some bit of rebound after TCS and the kind of management commentary that came in post their results. Your sense on the IT sector, and would you recommend to perhaps accumulate positions as far as IT stocks are concerned?
Not really. I think it's a trader's play. It's a recommend for accumulation only if you have space in the value part of your portfolio. I don't see IT as a growth pack, and all these corrections and bounce backs. I think from a trading perspective, it makes very good sense because there's a good degree of margin of safety now with the kind of correction that's taken place. But whether that's going to lead into a bounce or is it just a dead cat bounce, I think it's very hard to say. Very news flow driven. So from a trader's perspective, see the moment there is some US stockbroker, some analyst who comes and rates it up, it'll move up. Somebody else will rate it down. AI will come up with a new threat. So there's going to be a lot of volatility in this segment. So it's a fertile ground for a trader to enter with book profits and stop loss and enter and exit. But on a longer term, medium term perspective, I don't think there are clear cut answers yet on how the IT sector is going to meet the AI challenge, the business model change challenge, and all of that. So I would say that if you feel that you need a margin of safety in your portfolio, right, then to the value component, you can add it. Similarly, if you're attracted by the dividend yield and you are somebody who's an income seeking, and there are many FIs also like pension funds who are in that space and who will keep buying at these dips. So I would say reasonably a floor is there in IT, but it's not a growth. It's not something where you can expect maximum capital appreciation. So I would be cautious if you are looking to add it from that perspective.
Okay, so don't expect capital appreciation as far as the IT sector is concerned. That's the view coming in. But Nagraj, let me come to you and your view on IT stocks. Mr. Subramaniam was just talking about how it is a trader's play. Your technical view on the index and some individual stocks from the index?
Yeah, view is not that great for the IT sector. Still, it is showing some consolidation. We have seen some significant bounce back from the lower levels. After that, it shifted into a consolidation. TCS, let's take a look at last 4-5 sessions moving in a range bound action. Nothing has changed so far. I think some more consolidation is likely. I'm not expecting a bigger decline from here onwards, but some more underperformance is likely in the IT prominent IT stocks for the near term.
On that note, Nagraj, thank you so much for your time. Good to speak with you as always, and thank you for your views today. Shifting focus then, viewers, public sector banks. So remember, Nifty PSU Bank is the top gaining sector as we speak, and public sector banks have submitted a set of recommendations to the government for developing a long-term financing model for strategically important projects aligned with the vision of Viksit Bharat 2047. Prakash is joining us with all of those exclusive details.
Well, sources tell us that public sector banks have submitted key recommendations to the government to develop a long-term financing model for strategically important projects, a very significant development. In fact, the recommendations have been made to the Finance Ministry to meet financing needs in line with the vision of Viksit Bharat by 2047. These recommendations were discussed during the recently concluded PSB's Manthan and submitted to the Finance Ministry, which include developing a pipeline of bankable projects. Sources also suggest that public sector banks seek a government-backed structured project screening mechanism to identify strategically important projects. Development of standardized DPR and credit enhancement mechanism for critical projects were part of the deliberations. It also suggests that efforts should be made to encourage participation from institutional investors, and there is a need to develop a unified RFQ mechanism to improve price discovery. In fact, recommendations have also been made for innovative financing solution by banks and other financial institutions where it intends to develop diversified asset pools through acquisition of financing models. These key recommendations were discussed during the recently concluded PSB's Manthan and submitted to the Finance Ministry.
Okay, Prakash, thanks for taking us through all of those details. So yes, PSU banks have been in focus since the get-go, and that's the latest update coming in on that pack of the market. Mr. Subramaniam, hi, good afternoon. How are you looking at the Nifty PSU Bank Index? Do you believe that the PSU banks are much better placed in terms of a return potential compared to large private sector banks, or would your view be different there?
Yeah, it depends on the time frame that you're going to choose. If you have anything like a 18-month outlook, I agree with your stance. The reason I mentioned an 18-month outlook is because immediately if you see, and if you look at the quarterly earnings numbers and the disclosures, the private sector banks have been a bit ahead in terms of their, what do I say, NPA levels, the management and all of that. Public sector banks have got the benefit of a CASA book, and on the fundraising side, they are better off. But the coming season is a festival season, and you're going to see a lot of discretionary consumption, consumer durables, auto, all of these sales pick up. And private sector banks and NBFCs are much in a better position to convert those into business. So the credit growth that's anticipated during the festival season would actually go to the private sector banks in a larger market share. So public sector banks will come into play when the capex cycle gets going, and which will be, I think, its green shoots are there. They're starting, but they will catch up with a bit of a speed, I would say, from early next year, right? From 2027 onwards. So in that, they have a very good market share because a lot of the capex is financed by SMEs and MSMEs, executed by them, the order books. And their financing, I think the private sector banks would stay away from. They have not had a good experience there, whereas public sector banks have decades of experience in lending to the SME, MSME segment. So they would grab good market share and good NIMs there because these smaller companies don't have a good bargaining power. So the rates of interest on their loans will be very high, and public sector banks would enjoy the benefits. So you need to be a bit patient. So you're building a medium-term portfolio, 18 months plus, I say up to 5 years. Public sector banks are an excellent bet because in addition to what we just discussed about the recommendations made to the ministry to help them do their jobs easier, right? A lot of those. I expect also mergers on the public sector banks to be a big part of the agenda. Probably in the coming budget in February, you will see something because we need to globally scale them. So all of those things are very, very positive for the public sector banking space. But keep in mind that in the near term, private sector banks might outperform in terms of EPS growth and the stuff like, but it doesn't mean that public sector banks are bad, but it'll take a bit of time for the true potential to be displayed. So have a medium-term view, and I'm positive and bullish on the Nifty PSU Bank index itself.
Okay, so that's the view coming in on several of these private sector banks. But let's also put the spotlight on Ola Electric. That is one stock which is up 5%, although there is no fundamental view or technical news that is leading to this kind of rally. But Kunal, your thoughts on Ola Electric at 38 currently. What do charts suggest for this counter?
Well, I think it's an avoid, Ashisha, because I think the stock is too much of a high beta, too volatile. There are far better names in the two-wheelers to the four-wheelers back in fact, in the auto sector as such, which have done very well. Look at what Ather has done in the last, I think, 3 months or 4 months. The stock has run up more than 20-25% or more than that. TVS Motors has come back towards a fresh lifetime high, above 4,500 plus mark. Bajaj Auto is on the verge of hitting a lifetime high. Hero MotoCorp has recovered quite smartly in the last 2 months or so. So I would probably concentrate on the more formidable ones rather than a very high beta stock like Ola Electric.
Understood. That's your preference when it comes to the two-wheeler space. But let's refocus. And in fact, we have about 7 block deals that are on focus today. And a big change of hands is something that we've seen. And that has triggered sharp moves in a bunch of stocks. Mithali is here with the details on each one of them. Mithali.
Right, so 7 block deals happened in today's trading session. Thousands of crore rupees exchanged their hands and some sharp moves coming in if you see on the streets as well. So let's start first with Welspun Corp. A massive 1433 odd crore rupees of block deal happened here involving around 2.4% equity exchange. The promoter as well as the CEO stake sale triggered a 5 to 6% of decline in the stock, even as the stock remains up nearly 179% on a year-to-date basis. Moving on now to Physics Wala. So around 550 odd crore rupees worth of shares exchange hands, or roughly 1.6% of the company's total shares. Interestingly, the stock has jumped nearly 5% despite the large block trade after gaining over 63% during the past 6 months. Also, that stock is in focus, a whopping 2,500 crore rupees of block deal representing around 2.1% of the equity weight on the stock. Shares were quietly under pressure in today's trading session with Ribbit Capital among the sellers. Also, moving now to Viyash Scientific, so around 1,390 crore rupees of deal happened in this stock, representing more than 10% of the company's stake. The stock has fallen about 5% or more than that, making it the biggest proportional stake transfer among these names. Rubicon Research also saw nearly 1.3 crore rupees or 7.85% of equity stake change, but unlike most of its peers, the stock was up in today's trading session. Also, Avenue Supermarts or D-Mart saw around 69 lakh shares or 1.06% of equity changing hands, with the stock coming under pressure after this block deal happened. And lastly, Hexaware Technologies also saw a block deal of around 0.93% of equity trading in a block deal. The stock was relatively flat after this block deal was reported.
Okay, so several block deals that have taken place today. Mitali, thank you for joining us, and we'll of course have the details of buyers and sellers later today evening. But let's put the spotlight on some of those. PhysicsWallah, that stock is up 4%. On the flip side, we have Grow, and that stock is down 3.5% in trade today. Kunal, your view on both these counters, Grow and PhysicsWallah?
Yeah, I think PhysicsWallah could be something more of a trading opportunity over here. The stock seems to be bouncing back from 120 levels to 126, where the stock is trading right now. So it looks to be more like a trading bet, can head towards 134, 36 kind of a level. So not too much optimistic on the stock price, but yeah, from a short-term trading perspective, another 3%, 4% upside is what I would look at. But Grow could be an interesting bet from a medium-term perspective. I think the zone of 185, 195 for Grow, I think has been a good support zone for the stock in the limited chart history. So short-term wise, I would believe PhysicsWallah can see another 3-4% kind of an upside, but I think Grow could be a good accumulation between this zone of 185 to 195.
That's the take on some of those stocks. Mr. Subramaniam, wanted your view on how you are looking at the defense pack right now. Yesterday, we had the news that DRDO is going to be sharing its technology with some of the private defense players. And today, you've got names like Data Patterns, that's up 5%, Cyan DLM, Paras Defense, Mishra Dhatu. All of these defense names are doing very well, while the index, however, on an overall basis is absolutely flat. How are you looking at defense as a space? And do you believe that this is a basket that our viewers with slightly long-term horizon should be looking at? Is it a constructive long-term play?
I think it's a constructive long-term play, but I'd make 3-4 points about it. The first is that the defense index is the not right way to look at it because it's dominated by the PSUs, whereas I think the future lies in the hands of the private sector. So I would argue that you should build your own defense portfolio of 15-20 stocks, but give a weightage, I would say 55-60% to the private sector as opposed to the public sector, which is diametrically opposite the index. Second is that I'm very bullish on the future, but the problem is a lot of the bullishness is in the price, and those valuations are not cheap. So clearly, you've got to be a very long-term player. I would argue that you have to go up to 7-10 years holding period to really, get a further uptick, because the future growth is not going to come from valuation operating. It's going to come from actual EPS growth, which will come through. And the reason I also stress that is because the execution timeline for their order book, the order books are very healthy, excellent, but execution timelines are anywhere between 3 to 5 years. So you've got to give them be patient with them for them to execute. There's no downside risk, but the risk of delay in execution remains. The fourth thing is that I think the reason I also mentioned the private sector, because while this DRDO transfer, all of that is very good, the real future lies in exports. Because most of the countries now, NATO, because Trump is withdrawing his hands from NATO, the other emerging market, the UAE and the other Gulf countries, all are building up their defense arsenal. And in the new age warfare, I think in Operation Sindoor, Indian defense companies showed how the modern day warfare like drones and UAVs, they are doing very, very well. And these are the kind of things which will be needed by the world at large. So I see a huge export boom. My sense is we could even hit 75 to 80,000 crores in the next 5 years in defense exports. So if you can also tilt into those kind of companies which are geared towards these kind of products which have a good export potential, rather than just rely on the government order and the domestic execution part, I would say that would be a better place to step in. And finally, I would say that keep about, if you have an allocation for defense, keep about 10 to 15% as cash. The reason is, one, that there would be volatility and correction because of the high valuations. When there is sector rotation happening, this is an easy spot for the DIIs to step into, to book profits, to go into other positive sectors. So there will be volatility along the line, number one. Number two, I see also a huge pipeline over the next 3 to 4 years of newer companies coming to list in the market in this space. So keep some firepower ready with you in your allocation to buy those names as they come for listing.
Okay, so that's the view coming in on several of these defense stocks. Remember, the entire basket was in focus yesterday and will continue to remain in focus over the next few days. But shifting focus then, India added 1.3 million credit cards in the month of July, up 11.5% on a month-on-month basis, taking cards in force up 10% YOY. HDFC Bank led card additions, followed by SBI Card, while PSU banks continued to gain spending share. Mithali is now joining us with the highlights from this.
If you see the India's credit card market, it has continued to expand in the month of July as well, with card additions and the transaction volumes growing faster than the overall spending. Now, the credit card trends for the month of July, if you see, so cards in circulations, they have risen up by nearly 9.9% on a yearly basis, while the banks added the new cards in July around 1.26 million, which was up 11.5% on a monthly basis. If you see the transactions volume, they have also seen quite a surge for this month. Transactions volume, they have jumped by 24.5% yearly, but the average transaction value, it has fallen by 14% to around 3,440 rupees, pointing to more frequent but smaller ticket purchases. Now, looking at the graphics for credit card spendings, if you see, so overall spending, it stood at 2.08 lakh crore rupees, up 7.4% yearly and up 3.4% on a monthly basis. Now, if you look at who added the most cards for the month of July, so HDFC Bank has led that pack by adding 2.3 lakh cards, followed by SBI Cards and ICICI Bank. Also in the list, we have Federal Bank as well as IDFC First Bank and Axis Bank. But IndusInd Bank was an exception, with its card base declining by around 9,400 for this month. Now, if you see over the 12-month additions, there also HDFC Bank seems to lead the pack. Over 12 months, HDFC Bank has added 2.1 million cards, followed by ICICI Bank at 1.64 million and SBI Cards at 1.5 million. Also, if you see the PSB's gain is also spending the share. Now, PSB credit card, the spends there have risen by 22% yearly, taking their share to now 22.2%, up 265 basis points, while for private banks it accounted for 1.5 lakh odd crore rupees with a 72.1% market share. So overall, the credit card adoption, it is actually growing faster than the spending, while the PSP, the public sector banks, they continue to gain ground in the credit card market.
Okay, Mithali, thanks so much for taking us through that. So that's the kind of, that's a roundup on the credit card spends that we've seen off late. Kunal, let me come to you. The cash session is underway now. That's a closing auction session. We're seeing some moves coming in within the Nifty pack. It's JSW Steel, Eternal that are both higher by about 0.2%. I'm just taking a look at ICICI Bank, Aisha, Bharti. Kunal, am I seeing it right? Is there a 3% fall on all of these names in the cash session?
Yeah, I think the first 5-7 minutes, it acts a little tricky. The premium for the Nifty jumped up to almost 200 points. So that's another icing on the cake.
Absolutely. So we're going to be revisiting the kind of moves that we're seeing in cash right now, because the screen right now for some of these names. ICICI Bank is lower by 3%, Bharti Airtel lower by 3%, similar cut in Sun Pharma, Adani Ports, Asian Paints, Aisha, Bajaj Finance all seeing cuts of 2 to 3%. So yeah, that's just the volatility that we're seeing in the first 6 minutes of the cash session that have been at play right now. We'll try and revisit all of these names in a couple of minutes as well and see where they have stabilized for the day. But Mr. Subramaniam, let's talk about telecom. Bharti Airtel as of now, of course, under pressure. But how are you looking at Vodafone, a stock that was at a 2-year high yesterday and did really well? What's the outlook on telecom? And of course, now with Jio also trying to list sooner or later, how do you think that is going to impact the listed telecom players?
No, I think that the telecom story is good. The story of penetration, the story of their increasing the RPUs, the pricing also will be going up. Overall, the telecom space is in a good space, I would say. And Jio coming to list is not going to make much difference in terms of the ground level action because their business models are very clear in terms of how they approach it. Bharti has a higher RPU and looks at profitability, and Jio is looking at mass market share. Their positioning is very clear. Jio's listing is also going to be that they're putting it as a platform rather than as a pure telecom player. So the pricing, the P ratios that they will be different. But you coming to the overall space, I think that these two players are going to dominate. So Vodafone as a player is going to be a trading play. I mentioned this about something else earlier, right, about IT. So very similar to that because Vodafone is never going to be getting market share over these two players. Their muscle is just too strong at the ground. Their network, their investment. I don't think Vodafone is just coming out of its troubles. It's not going to be able to invest at any kind of the levels that the other two do. So in a kind of it's a 2.75 player industry, right? Those two players are sharing in most of it. There's only 1/4 of it, which is there with the Vodafone player. So I would say if you're investing in it, you always go with the leader and the challenger. But the third player is always going to be left behind. So broadly from an industry's oligopoly characteristic, I would say this. But then, like since the industry has a good tailwind ahead of it overall in terms of penetration and increasing data usage across the country, you will see that there are trading opportunities that will be there in stocks like Vodafone, which you should play, again, like I say, book profit, stop loss, enter, exit that way. So otherwise, I don't want to talk about any specific stocks here, but like I said, the leader and the challenger are both should be in your portfolio. The third one should be largely a trading bet.
Okay, so that's the view coming in on several of these counters. But Kunal, let me come back to you. And I'm sure we've discussed metals, but again, your thoughts on a couple of these movers, Hindustan Zinc, SAIL, Vedanta, all of them gaining anywhere between 4 to 6.5%. Your thoughts on these stocks?
Yeah, metals are definitely shining, Ashisha. So I think it's a good sign that metals are finally making a very good comeback. In fact, last week I'd given a buy call on many of the metal names. We started off with Hindalco, Nalco being one of the stronger ones, followed up by JSW Steel. Very recently, I think last couple of days back, I'd been bullish on Tata Steel, and now that stock has started to start to move up higher. I would sense that I think we're looking at a big metal rally coming back. So look at it this way: start of 2026, when the entire narrative of US-Iran war was going on, metals was one of the formidable sectors which had done very well for itself. Then when the markets bottomed out in the month of March and April start, is where metals started to go into a correction. And the degree of correction for many of these metal stocks was around 20%, 15 to 20% broadly for large cap metal stocks. And now these metal stocks are making a comeback for themselves. So I strongly believe that I think we are looking at a point where the entire metal rally or the metal sector has sort of turned around. And we could be looking at many of these metal stocks either trying to reclaim back their previous lifetime highs or swing highs, or many of these stocks coming back into breakouts and covering up the underperformance. I think it's a good sector to be participated into. One stock which I think from the metal, not exactly from the metal pack, but from the commodities theme, which is given a breakout today, is NMDC. That stock around 86, 87, 88 levels where it's trading right now. I think it's also something which starts to look very attractive, and specifically given almost 3-4 months of a consistent underperformance the stock had been through.
That's on metals, and I'm just trying to revisit some of those nifty names that were heavily under pressure when the cash session took place. Aisha is still lower by 2%. Maruti, SBI Life, Power Grid, these are some of the stocks that are still heavily under pressure. What really stands out is the fall that we've seen in Nifty 500. If we could pull up the chart for Nifty 500 on an intraday basis, remember for the better part of the trading session, you had more than 300 stocks that were in the green, with slightly lesser number of the stocks in the red right now. Nifty 500, you can see that sharp fall in the chart that we're speaking about right now, lower by about 0.5%. And right now we're exactly at even Steven, 250 stocks in the red and 250 in the green. That is what the advanced decline ratio is looking like right now. However, in the last about 11 minutes since the cash session has been underway, it's Bajaj Holdings that's higher by 2.25%, IDBI Bank up 2%, United Spirits, Premier Energies, Max Financials. These are some of the names that are doing well. And what continues to be under pressure on the flip side is Eicher, like we were talking about, along with Radico Khaitan, Sun Pharma, Petronet LNG, Jindal Steel, LTM, Lodha. All of these stocks are seeing cuts between 1.5% to 3%. Kunal, a quick view on Bajaj Holding and IDBI Bank. Do you track these stocks on the charts? Because they're seeing a little bit of an uptick in the cash session.
Bajaj Holding is interesting, Sneha, because the stock in the last, I think, few days had gone through a consolidation, moved in a band of 11,700, 600 as a resistance, and 10,900, which was the swing low the stock had made, I think, yesterday, 10,800 to be precise. The stock made a low yesterday on the monthly closing expiry. So I think now you're seeing recovery of sorts for Bajaj Holding. Looks attractive as a chart setup. I would sense that maybe over the next couple of days, the stock may consolidate a little, but it should be ready for getting up for a breakout above 11,600, 700 mark. So short-term trading wise, over the next maybe a couple of weeks, the stock should be good for a breakout above 11,700 plus levels.
700 plus levels, that's the target you need to keep your eye out on as far as Bajaj Holdings is concerned. But we were just talking about metal stocks with Kunal, and Mr. Subramaniam, let me come back to you with respect to your thoughts on the sector, especially something like Hindustan Copper. That stock is now up 4% today. Copper prices in the global market have been surging over the last few days, with copper now above that $14,500 per ton mark on London Metal Exchange. Your thoughts on the entire play? I understand that there is this overhang of OFS and the fact that the stock fell 7% yesterday. Hindustan Copper and your view on the entire sector?
My view on metal sector, I agree with Kunal that I'm bullish on that. And the reason for that is completely different. Individual metals could have their own dynamics going around. But I believe that the whole, US debasement of the dollar with the yields rising at the longer end is, I think, a positive for hard assets. So whether it's gold and silver or other metals, I think they are in for a good time, because when your financials of the US are looking a bit, not shaky, it's too strong a word, but definitely there are concerns around the extent of US debt, and over the longer period, you're seeing those yields being very, very sticky. It's positive for the hard asset pack, and metals being a part of it, I think they are in a good space on that. The other reason also from a fundamental perspective is whenever the Gulf War ends or whatever, there's a huge rebuilding exercise that's got to go on. And I think those infrastructure-related play will mean that a lot of metals are needed through infrastructure, right? Copper, aluminum, ferrous metals everywhere. So I think if you have a medium-term outlook, it's a good space to be in. But then it's probably one of the most volatile sectors in the stock market. So I would urge you all to take a staggered buying approach here in this, because the volatility will then can be translated in your favor.
Thank you for that view. On that note, we will let you go. Just taking a look at how the cash market is wrapping up for the day. We're low by about 0.5% on the